So what is an angel investor? An angel investor is a wealthy individual who backs small startups and business ventures with funding in exchange for ownership in their company. Let's say that you have a great business idea, but you don't have enough capital to start your own business. Luckily, you have a rich friend who sees the potential in you. Lucky. Therefore, he is willing to support you financially. You don't have to pay back the amount to your friend. However, you need to give a certain percentage of ownership of your company to your friend, which needs to be in balance with the amount of investment. For instance, he invests $1 million and demands 35% of your company. It goes without saying that your friend is aware of the risks and it is willing to take those. On the other hand, he is hoping for success to have a mutual beneficial agreement. It usually has two types. The one-time investment, meaning that the angel investor helps the small entrepreneur with money, usually only at the beginning, thus helping them to start their business and take their first steps. Let's say that your wealthy friend gives money to you, thus being able to take action and commence your startup. Moreover, the investor can provide them with money for a longer period on a regular basis. However, it is a crucial aspect that the investors are not willing to stay in the business for good. Therefore, they usually prefer to have the ability to get out of the agreement at any time they feel like doing so, most often when the business is not profitable for them anymore. This is called the exit strategy. What are the advantages of this investment? The amount of invested money is not set. It can range from thousands to even millions of dollars. Since cheaper sources of capital are not available for startups at their early stages, angel investment is a great possibility for them to start their business. However, the investors might demand high rates of return on investment, thereby making it an expensive source of funding. Angel investors provide favorable terms. They invest in the person starting the business rather than the business itself. It is a crucial factor that the startup owner doesn't have to repay the money, since investors give it in exchange for equity. What are some of the disadvantages? It is considered to be risky since the startups receive the investment money at an early stage, so success is not guaranteed at all. Investors want a remarkable percentage of the entrepreneur's company, therefore it happens quite often that inexperienced startup owners lose control over their finances and shares. As a result of this, it is crucial to think it through how much equity the starter of the company is willing to give away for the investor. If things do not go as planned, the angel investor might end up owning the majority of the equity than the original owner itself. Thanks for watching this video. If you would like to support our channel and free education, the best way is by sending a super thanks donation right below this video. If you want to learn more, visit our channel, please subscribe and check out these playlists.